Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. It's Tuesday morning, August 24th, 2021. Thank you so much for joining me here today. I'm very excited. Stock market made new all-time highs yesterday, came roaring back for the last 3 days after the Fed minutes last week. Very impressive rally. Volume was pretty good, not awesome. We're going to start out talking about sector rotation today. We're going to actually focus on tech stocks today. Yesterday, we focused a little bit on Bitcoin, crypto, Bitcoin getting over that 50,000 mark, had that line in the sand that we were talking about. And so far, it's holding that line in the sand. We looked at some of the Bitcoin mining stocks yesterday. They had a little bit of profit taking. Really was not shocking. As we mentioned last week, Mara, M-A-R-A, was up 12% alone on last Friday. And yesterday, kind of paused a little bit. Still closed positive, but you can see the profit taking came in. Not a big deal. Still looking pretty good. But actually, what I want to do is first, obviously, I want to make sure that the audio visual is good, because when we're doing this live, it needs to be good. Need to make sure I hit the mic button. You have no idea how many videos I've recorded where the mic was off. I had to redo the whole thing. So let's see. David LeBate, good morning. Rad Rat, good morning. Let me see. Milky Fade wants to discuss Amazon today. Okay. All right. No problem there. We'll dive into Amazon. Ross Marshall, good morning. Rad Rat, good morning. So you know what I want to do? Let me know what stocks are at the top of your list today. We'll also go over those stocks plus the few that I want to talk about. I had mentioned this morning that we're going to talk about Apple and the big level that Apple is sitting at right now. We're going to talk about a stock that is incredibly popular, has now rallied back up to a level that we've been watching probably for the better part of the last year. It looks very similar to what Amazon did when it finally broke out, which Amazon pulled all the way back. Actually, you know what? I'll show you that chart. I'll show you what Amazon looked like, and and the stock that we're going to be watching today, very similar to that. So the stock we're going to talk about today looks very eerily similar to Amazon right now, where it was basically in a 1-year trading range, maybe a little bit longer. Finally got up to that level today, so we're going to keep an eye on that one today too. Let's see. Twist Dead, good morning. Bill W, love to see you here every morning. You always comment on the videos. I want you to know how much I appreciate that. Really big deal to me. Let's see. Rick Soder, good morning. How are you, pal? Rika, good morning, Rika. How are you? Be fit for life. All right, good morning. I actually got back to the gym. Maybe I should hit you up for some ideas for training. Let's see. Catherine Goodson. Catherine, I love your comments. So passionate. Every single time you post something, it's wow. I love that. Let's see. Baba, Chinese breakout over VAC news. We could actually start out with that. We're getting a lot of questions about this. And what's interesting about this, I'll actually pull this back on the screen a little bit. Oh, actually, you know what? I have to just 1 second. I have to pull this up on the screen because it's kind of important. I got to put that in there. Okay, so obviously it's a part of what we do every day that I have to make it clear. Everything we're talking about here is for educational purposes. Everything that we discuss, you obviously have to make the final decision on your own. Hopefully we do a good job of pointing you in a direction where you understand what you're looking at, and then those decisions that you make are as confident as possible, because that's really the biggest thing, is having conviction in your ideas. When we decide to accept risk, it's because we built a good argument. And that's really my main purpose for this. My main mission is to help you understand it's so much more than, hey, that stock went up yesterday, a lot more than that. So we're going to talk about that kind of stuff today as well. We're also going to talk about a bunch of stocks that are up pre-market today. We'll get to those in a second. But we're actually going to hop into Baba. This is a really interesting setup because you can see the downtrend and the geopolitical news on these stocks just keep accelerating to the downside. Now, the one thing we want to point out, we want to really zoom out on this, and this is kind of an advanced trading conversation here where clearly anybody, even somebody who's trading for the first time can take a look at Baba right now and see that the stock is pushing to the downside, can see that bearish order flow is in charge of this stock. So what does that mean? That really means that the stock is not a great opportunity to buy right now, because remember, our job to keep things simple, to keep things structured, to keep things where we have absolute conviction. We're not looking to pick a top or a bottom. We're looking to find where the smart money is already doing something. And obviously, we're going to discuss that today, too, when we talk about this and we get into the sector rotation in which stocks, why we're going to be focusing on tech stocks today. The easier trades to have conviction are ones that are already going in that direction. We wait for them to slow down and we piggyback on that existing buying. This stock right now in BABA, and quite honestly, in some of the other Chinese stocks, specifically the Chinese electric vehicle stocks, they're not really that awesome right now. Right now, you'd really be hoping that they start to move in your favor. Now, there is one thing, and this is the reason I'm sticking with this idea right now, is because you need to understand what are the clues where smart money might be starting to step in and the tide might be turning. Now, there's a big difference between the tide's already going in that direction versus it might be changing. So what we're looking at here, as this has pushed to the downside. Now, I want to point out this is after a big move to the downside. That's a very key thing. The ideal situation that we would want to see in Alibaba right now, which is the most likely situation, is if the stock continued to trade heavy volume like it's trading right now. And you could really zoom this out so you can get an idea. Look at the size of that volume. I'm just going to reset that chart. Ideal scenario. Now, this is what you want to write down. This is accumulation. Accumulation happens after a downtrend and we go sideways. The sideways price action churning, very little up and down, but you can see it's clearly going sideways. But here's the big thing, increased volume. So right now we have the first sign in our boot camp. And what we do, we call this exhaustion. So when you get exhaustion to the downside, it's called many different things. Guys on the floor of the New York Stock Exchange used to call it a capitulation print. And I want to explain what that means. If you can imagine, let's use Catherine Goodson as an example right now. We're going to use Catherine, okay? 100%, don't catch a falling knife. It's such a low probability trade. But let's say, for example, that Catherine has a hedge fund. Let's say that Catherine is now watching stocks go down and she sees all this news that's going on and she's like, wow, I got 5 million shares of BABA. I want to start getting rid of this thing. She starts selling some of it. She starts selling some of it. And that's what you now see as the order flow going to the downside. But now Catherine, because Catherine is the largest seller of that stock, just as an example, let's say she has 500,000 shares left or 1 million shares left, whatever it happens to be. Catherine calls up, let's see who else is on here. We're going to say Daly Sampati. She calls up Daly Sampati, and he owns another hedge fund. And for whatever reason, he likes BABA in the future. So Catherine's been pushing it down. She's been the seller. And she calls up and she says, look, I have 1 million left to sell. If you give me a good print over the next couple of days, I'll sell you all of them. So good print means give me a good average price. And that's really where the term order flow comes from. So Catherine calls him up. I don't know if that's a him or her. I'm just saying, I apologize if it's not. Catherine calls up Daly and says, okay, give me a good print. I'll give you the rest of the balance. And she knows she's the selling pressure. So that's basically a cleanup print. So when you see after a big move and you see a big spike like that, whether it's to the upside or the downside, it's typically the end of that big selling pressure. It's one big ending move. Now, does that mean that you automatically start to buy after that big move to the downside? Heck no. It's the first sign. So if you can see what we have on the screen right here, this exhaustion print is the end or the cleanup print. Now you had another one over here after the downside. So now we can actually kind of draw a line in the sand. That's actually where the cleanup print started. This is where they're going on. So the more we kind of go sideways, and we'll actually make that one green. We'll make that one green as that's kind of the go sign because that's the first place where it started to move back up in that direction. Okay, that's a big deal. So somewhere above that 180 level is where smart money started to increase the volume, where something significant happened. So where we are now between 160 and 180, that's kind of the window where we expect heavier volume and lack of price movement. Now, this is a key point here. So if you could imagine all this selling, and smart money is buying on the way down for whatever reason. We don't care what the reason is. We had a conversation yesterday with somebody about why. We don't care why. If they're stepping up, they have research, there's a reason why, right? As that selling is going down, if the selling starts to slow down and the smart money wants more shares, they can't just sit there anymore saying, okay, I'll just take it as it's going down. I'll do it as quietly as possible, even though it's showing up in the volume. At some point, they have to say, well, I really want more BABA because someplace in the future, maybe 6 months from now, maybe a year from now, I think it's going to be back over 200. So then if the selling dried up, they have to start paying higher prices right now at that point, if the selling dries up. So these are the clues that we look for on the charts. So if we're looking, and remember, we talked about this yesterday, what we need to then start seeing is the same kind of volume profile, but then we need to see it happening from 1 week to the next. So you can see here, they tried here, it didn't happen. They tried here, and now this could be the start. So what we're looking for is this. We're looking for the weekly chart, which is now 5 days of trading, 10 days of trading, 15 days of trading, where the smart money is now stepping up, paying higher prices, and it starts to move back in that direction. And what's kind of interesting is we had somebody named Bruce. I don't know if you're watching live, Bruce, or not, if you're going to watch the replay. We're going back and forth in the comments yesterday about all of the possible reasons why. Is it hedging? Is it this? Who cares? Who cares why? Doesn't the only thing that matters is the fact that it's going higher and it's going higher consistently? If somebody with deep pockets and a lot of research, and we call that the smart money, is paying higher prices, I don't care why they're doing it. All I care is they are doing it. We find a spot to piggyback on them. And then, this is a key, you need to have a method of determining if and when that changes. So the same way that we're looking at it on the way down, and we're giving you all of that argument, all the pieces to the puzzle to determine if it turned around, if it's the end of that move, if it's the cleanup print, if it's the exhaustion, the same way that we identify a potential bottom into a new move, which we just gave you the whole scenario, you have to identify if it starts going up and they're paying higher prices, you need something that tells you that maybe the type has changed in the other direction. So, Bruce, you have to answer the whole thing. It can't be just one little segment. It's got to be the whole piece of the argument, and that's what makes somebody a good trader. Remember, if you want to elevate yourself from chart reader to trader, you have to build these arguments, and that's what we do in the boot camp. That's what we do in our community, which is really determining all of the reasons that we should put our money in harm's way, accept risk in exchange for what we believe is pretty good profit potential. Okay, so that's my breakdown on Baba right now. We also, Milky Fade, who's in the call today, was asking about Amazon. I want to talk about Amazon in the same way that I would talk about it as if we were in our community. And it really comes down to this. Amazon, since earnings, has not been in a good place. If we zoom this out, so let's just starting out with the daily chart. And if you think about what we just said, Amazon, for the first day, finally, after 3 weeks of selling, showed some signs of life. It showed some signs of increasing order flow. But look at the bottom down here. The average volume is here. Even on yesterday, a day where it was really impressive price action, we wanted to see the volume step up. So we're putting the clues together. It looked okay. Here's how I'd be looking at Amazon, and this is how I'd be looking at it to determine whether or not I want to be in this stock. And it really comes down to this. There's no reason at all to guess. One of the keys to what we do is there's no reason at all for guessing. So Amazon, as of yesterday, broke that downtrend. So now what we need to do is we need to have lines in the sand of how we determine where the most recent price action is. So you have the low down here, and you have this new level here, which is 32.80, and it's trading just above that level. So how do we put that together as a trade? If we're looking at a trade in Amazon, and he was actually talking about it pulling back a little bit, we're showing the first signs of accumulation. We're showing the first signs of Amazon turning around and heading back to the upside. But here's the key, and this is a huge part of trading. I can't emphasize how big this is. Yesterday, actually, if you want to go back to yesterday's video, we talked about position sizing. Now, here's the key. If Amazon has been in a 3-week downtrend, roughly maybe even longer than that since earnings and since that big gap down, you are now looking at the first stage of accumulation, the first stage of smart money starting to get involved in that stock. So how should that affect position sizing? How should all of us smartly, professionally start to get involved in Amazon? Well, it's only the first signs of it reversing. So that means we tiptoe in. If you know anything about reminiscences of a stock operator and all of the top professional traders, you put a probe out there like Jesse Livermore called it. My friends used to call it a tier 1 trade, where if you want 1,000 shares, you're probably putting on your first 300 and you're looking for feedback from the market. So if we're looking at Amazon right now, that is how, if we were trading on my desk in New York City when I had my trading firm, we'd have this kind of conversation. We'd write it on the whiteboard, be like, okay, here's the script for how we're going to trade Amazon. We want a little bit more feedback, but it's okay to put out the first piece of your trade. Okay. I want to say hello to a couple other people. Shane, good morning. Happy Tuesday to you. I saw Raphael in here before as well. Blue Sky, good morning. Okay, so what we're going to jump in now is we talked about one of the top stocks I was watching today, and Apple. Yesterday we mentioned Apple, and what I generally say is that's the right price. Right now, that price between basically, we can probably even move this up a little bit now based on the most recent price action. You can see how we're actually working the charts. Right now, between 144, 149.50. That's kind of the right price. But now Apple is well bid for 3 days, right in front of that breakout level. 150 has been the level that we've been watching. Now, you need to know what you need to see. You need to know what you expect. So right now, Apple above this level is a pretty big deal. So right now it's trading at 149.63, which means that realistically, we're probably going to have a chance to get involved at the 150, probably 150.50 level, just through that level. We want to see it get through there, and we want to see volume step up after that. So that's really the level that I'm going to be watching Apple today. Tying that into the stronger stocks, which is this. Everybody knows that we start out every day, and I suggest this every day. You go and find the smart money. Again, there's no reason at all to guess what you should be doing every day, because the smart money is literally sitting right there telling us what they're doing. So you can see we're looking at it in multiple time frames. Here's yesterday. Yesterday was just amazing. Market lit up. We hit new all-time highs, rocketed higher. Here's the last month. Still pretty decent. We got the energy sector and basic materials, which were pretty good for a while. Basic materials specifically, they kind of faded back. Two stocks we're going to take a look at is NUE and AA. We'll talk about those in a second. But as far as something that has green across the board, and that's a big part of what we do, green across the board, is technology. So we're going to work our way over. Obviously, we just talked about Apple, and now we're going to work our way over into some other stocks that are going to be on my focus. And probably the top one, which is one that I mentioned in this morning's email, and you can see here, look at Netflix. Tell me that doesn't look tremendously similar to what we just looked at in Amazon before Amazon rolled over. So the number that we've been watching all of this time in Netflix, here, and you'll hear me mention this, especially if you go behind the scenes and you get into our private community. We're constantly talking about, why would I want to trade it at a level that sellers keep smashing it? But now we're back up to that level. So 560 is the level that I'm going to be watching Amazon today. But more importantly, I'm going to keep an eye on this. Again, we keep talking about where the smart money is, and you can see across the board, technology has made its way back to the top, and this is why you need to do this every day. So some technology stocks I'm going to be watching today. NVIDIA, one that has not performed well, but it's still back on my radar, is Triple D. Earnings came out over here, and now the stock went well bid again. So I'm going to be starting to watch that one again today. Another stock that's been in our radar for a while, Asana. You can see a very, very clean, bullish order flow here. And actually, if you start it down here, you really have not broken the trend up here. This has just been really super clean. And by the way, when you draw trend lines, very important, when you start at the lowest low and you go up, do not go through any price. You go up to the highest low, and that becomes where the trend line should be violated. So at worst case scenario, the stock would pull back to 72. Best case scenario, finally get it back over 80. Okay. So I just want to talk about a couple of other ones. AMD has been in the radar. I've been trading the stock pretty much every day for the last month. Again, if we zoom down to that hourly chart, it does look like we finally broke that trend. This one right here, I'll just draw it out so it's super clear right there. And you can see, again, I didn't go through any price. So that's really the break of the trend. So yesterday, it looks like AMD picked up a little bit. Two more they're going to be watching in the tech sector, which is NET and MRVL. So those are going to be the top stocks in the tech sector today that I'm going to be watching. So what I'd like to do, we actually have to head over. We have about 5 more minutes on the live stream, maybe 12 minutes actually. I'd like to look at some of the ideas that you're watching today, and then we'll take a look and run them through as if we were in my trading floor, or if you were in the boot camp with us, and go over whether or not I think order flow is a good idea, not a good idea, why it might be a good idea, or why it might not be a good idea. And I just realized I wasn't on camera, so I was doing all these hand moves, and I wasn't on camera. So I want you to do right now is, if you could just join me, participate. This is the number one thing I talk about in our boot camp. You will absolutely get the most value out of our time together by participating. I want to help. My mission is to make this easy for you. Participate. What stocks are you looking at right now? And we'll kind of do like a rapid fire thing and go over it. I also want to talk about, first I want to tell you how thankful I am. I'm very grateful that you've joined me here today, because these are kind of fun for me to do. And hopefully we have a good back and forth and really get to the point where you gain confidence. That's really the biggest thing, gaining confidence. All right. All right. So I just want to go up a little bit. We're going to go stock by stock. There was one. Oh, Cisco. Cisco is one. Cisco has actually had pretty good price action recently, and you can see the volume on this breakout is pretty good. Now, this is an interesting one because I do like the trade in Cisco, but I don't like it as a new swing trade. And this is a very important thing. If you put on a new swing trade, which is longer than a day trade, anywhere from 3 to 10 days, if the stock normally does this and it's already gone 50% of what it normally does, you have to have less shares on that initial trade. So if we look to trade Cisco right now, that means that a lot of the profit potential of what the stock normally does is already used up. So you either go in with smaller share size or you wait for a pause for the next trade. I love the Cisco breakout, but I'm not chasing it on this really big move 3 days later. Now, big is relative to the stock, but you can look to the left, which is a big part of it. Look to the left and see what is the biggest move that Cisco's done in the last 12 months. And in the one move, this is the biggest move. So maybe the stock has 1 or 2 more days. So if we were game planning trading Cisco together right now, I would probably be looking to trade it for maybe 2 more days bullish, wait for a pause, and then that next move would be the bigger move where I'd be looking to size up maybe just a little bit. Let's see. I want to keep going. Baba, we just talked about. Lily. Okay, Lily's a good one. And we'll take a look at Fubo as well. Lily, obviously, if you looked at the sector rotation stuff, let me actually make myself there. We look at sector rotation. Healthcare was right there as well. So we're going to obviously keep an eye on Lily. Lily is now pausing perfectly. It's really sitting right at this level. It's actually got back up to this 265, 270 level. But here's the thing, and this is really where it's important. You need to know what time frame you're trading. You can see clearly it's having a hard time at 270, 272. So right now, the way I'm looking at the stock, it's in the right sector. It's one of the hottest stocks. Again, you can see from May, really good, clean move to the upside. I like the stock, but because now it's basically almost the entire month of August stuck in this window, if you get involved on your first piece right now, it would be lower share size and looking for confirmation. Remember, smart traders commit in 1 or 2 ways. Unbelievably really obvious order flow and a good spot with room to go. Or if it's obvious order flow and stuck, you put the first piece on and then you get feedback before you start to size up. So there's 2 ways to get size. Great ideas with room to go and a good entry. Or if it's stuck like this, but obvious, you put on the first piece and you get out. I can't stress this enough. We talk about this all the time. Position sizing and how you manage the downside, that's how you become a trader who sees their account grow with consistency to the upside. It's not about having that one big home run trade. It's about taking the trades over time, managing the downside, and learning how to make more on the winners. So I love the Lily idea. Quite honestly, I think it's a really solid idea. It's a question of now it's stuck in a 3-week trading range. So if you have the first piece now, you wouldn't add and what we call size up until it get a little more feedback outside of this level. And for me, that would be above a strong close with volume over 272. Okay. Let's see. Oh, Fubo was one that was mentioned. I forgot who that was. Let me see. I just want to go back there. I can't remember who that was. So anyway, Fubo is a trade I wouldn't touch with a 10-foot pole right now. There is zero edge to Fubo right now. What you need to do, and this is something to write down. Remember yesterday we talked about Post-it pads. All good traders have Post-it pads all over their monitors. You want to be able to look at a stock and say right now, wow, buyers are really in charge of that stock, and I can't wait to join them. There's no way in the world you could look at Fubo right now and say that. Had earnings gapped up, and it's been selling down, and it's kind of sideways. And you can see the level. We actually looked at the level around 33. So if you're looking to be a buyer, if you're on my trading desk right now, if you're in my bootcamp community, again, no hard sell pitch. If you want to learn about it, click the link below. There's no edge here. You're basically hoping that smart money starts to do something. Remember, the easier trades are where it's obvious. That's not obvious right now. It had earnings sold off, and it's just sitting there. Does that mean it can't go up today? Of course, it could go up today. Is it obvious? No. You want it to be screaming, wow, I can't wait to hop on board because of how obvious it is. That's not obvious. Again, these little things add up to huge progress over time where you say, wow, I'm taking easier trades right now, and I'm not stressed out of my mind because it's already going in that direction. Right now, that's a hope trade, and I personally, I wouldn't be involved in that, okay? Let's see, Richard asking about Square. Okay. Square and PayPal actually having decent weeks. Now, again, remember we talked about before, Are sellers doing something significant at a certain level? Okay. Are they doing something significant at a certain level? And in this case, yeah, they keep shoving it down just below 280. So I love the bullish gap yesterday. I like the 2 days in square that finally bounced up and pushed. And I'm actually going to zoom this out. Maybe you can see it a little bit cleaner. So the recent price action is pretty good. We had a nice swing low here after this melted candle, went well bid, bullish gap. But now 280 is a monster level. 276, 280, somewhere in that window. So again, what is the right way to trade this stock? If we zoom out and we keep seeing gets up to that level, gets smashed down, gets up to that level and smashed down, are you going to fight the smart money that keeps smashing it down at that level? For me personally, I like the order flow. I like the fact that it got up there. I'm not going to commit that much money to this idea until it finally clears that level and smart money says, yeah, we like it better through this level. And then why would you want to fight somebody who keeps smashing it at that level? Get feedback and then get involved. Don't tie up your capital where it's expected to hold. Maybe you put on a small piece. For me personally, $280 stock, I want to get through that level before I get involved, and then I'll commit it. Remember, we want to have our money working for us. We're talking about active trading. We're not talking about investing where we're going to watch Square over the next 5 years and look at their PE ratio. It's important. I'm not saying it's not important. What I am saying is that this right now keeps getting sold at this price. I'm going to put my money to work someplace else, maybe like Apple today, maybe like Nvidia that we talked before. Then if this stock punches through, so what are we looking for? Large volume candlestick, closing on the highs above 280. We call that an energy candlestick. That's also something you want to write down. You know what? Actually, I want to talk about, let's see, Kevin's asking about Roku. I'm going to head over to Roku. And again, very similar. Very, very similar. Let's take a look at this now. And let's think and act like a professional from minute one. If we're looking at Roku right now, the person maybe looking to get involved in Roku right now is saying, well, you know what? About 4 weeks ago, the stock was $480, was on fire, near all-time highs, making all-time highs. The stock has now pulled back quite a bit. I think I'm going to be getting a bargain in Roku right now. Well, how much smart money are you leaning on to put your money in harm's way to want to start buying Roku? Let's work our way across, right? This is an order flow lesson. This is being the smart money, thinking and acting like a professional. Right now, you have 2 days of buying. Remember what we talked about. If you think about how smart money moves stocks, why do stocks go up and down? Let's not talk about all the reasons and all that stuff. All we know is somebody with deep pockets, a lot of research, is committing real money. Before we talked about Catherine dumping shares in Baba and what that looked like and the price action because of what is believed to be the future of that stock. Now, if smart money is allocating and buying 100,000 shares, 200,000, a million shares, they have to start stepping up. But doing it one day is not enough for us to lean on. Right now, we basically have 1 day of buying in Roku. If you want to lean on 1 day, that's okay. I wouldn't do that. But let's take a look at what you're fighting. You're fighting 1, 2, 3, 4 weeks of selling. You're fighting 4 weeks of selling versus 1 day of buying. Is it a potential reversal here? Maybe. We had a melted candle here, which means indecision after 3 weeks. All right, let's zoom that out a little bit. Melted candle is when you get a small body candle. So it traded up, it traded down, opened and closed in that same area. Indecision. So maybe after 3 weeks of selling, but it actually was 4 weeks. Maybe that fourth week was a little bit of indecision in the selling, and maybe we're turning around right now. So remember, you're buying 1 day of order flow against 4 weeks. You tiptoe your way in if you want to do that. I personally would wait for a little bit more feedback, maybe 1 full week where we go well bid, higher highs, higher lows. I'd be looking for something like that. That's what I'd be looking for before I started to get involved in Roku. So it's really kind of cool. And I think the biggest thing to discuss here, make trading easier on yourself. Make it easy. Is that Roku possibly an idea to trade? Maybe. Is it a great idea to trade? No, it's not. You're bottom fishing. I am telling you, the easiest way to remove and eliminate all of the stress from trading is to find ideas where smart money is already buying them. We talked about a couple today. Nvidia, Cisco, for that matter, right? Get involved in stocks where smart money is already committing capital from 1 day to the next, from 1 week to the next, 1 month to the next. Have in place to know understand when the tape changed. And that's where you get involved in good ideas and understand when you should be getting out of those ideas. There's a lot more to it behind that. This is obviously what we do every day in our private community. But I can't stress this enough, and I just want to make sure that we discuss this today. If you're finding, and raise your hand if this is you, if you every time you put on a trade, it feels like it's moving against you. It's, oh, they're out to get me. As soon as I hit the buy button, immediately they know it's me. It starts going against me. If that's happening too often, that means that you're fighting the order flow. You need to learn and really think about what I just said. And this chart of Roku is really a good example. You can clearly see it might be turning around here, but you're fighting 3 weeks of selling. That's real order flow dumping stock. You need a little bit more confirmation. You need possibly something like this, where you want to see this weekly chart, say, okay, 5 more days of buying. They stepped up and they started to push it higher. Now I could kind of dip my toes in. Still not the best idea, but I could possibly dip my toes in. Very big difference in a stock that looks like that from one that's actually going up right now over a couple of weeks. Think about it. It's going up and pauses. You're just waiting for the pause to see a continuation versus it's going down and maybe it's turning around. I'm telling you, raise your hand if you're one of those traders that you feel like every trade you take immediately starts to move against you. That's tough trading. That's really tough. Find the easier money, learn order flow, learn how to read the tape, and then it's really just a question of position sizing and getting in and out at the right time. All right, so stocks for breakfast. That's we actually have to run because I have to go into the boot camp game plan meeting in a couple of minutes. So if you'd like to find out more about the boot camp, just click the link below. Just learn about it. If it's for you, fine. I'd love to see you on the other side. If not, obviously you can keep joining me here every day for Stocks for Breakfast. I just want you to know how much I appreciate that you spent your time here with me in the morning because, look, the bottom line is if you're here and asking questions, you really care. You really care about succeeding, and I want to help. I want to help as much as possible. Obviously, I can help so much on these live streams on YouTube. If you want to take it a step deeper, at least just see what's in the 30-day boot camp. It's not a subscription. It's basically a 30-day seminar, for lack of a better way of putting it, with real-time coaching, and you get all of my training. Either way, I hope you have a massively, massively profitable day today. We talked about some ideas today. I'm really looking for Apple to finally stay above that 150 level. We're going to look to see if AMD rallies. We're going to see if Triple D finally catches a bid after earnings from about a week and a half ago. We do have a few stocks that are trading up big today after earnings. JD, BILI, 2 stocks trading up pretty big, FUTU and TIGR as well. So we might be seeing a little bit of reversal in the Chinese stocks today, which means that maybe we'll be actively trading NEO, XPEV, and LI because they're really, really good stocks to actively trade. And we'll see if Tesla can stay above 700, maybe get above 725 and stay through there as well. So I want to thank you, everybody. Really appreciate that you are joining me here today. Remember, Monday through Friday, 7:30 a.m. We're going to keep doing this, and let's form a really nice, great community here. Let's become friends, and maybe even a little bit more if you see what's behind the curtain in the boot camp. All right, so I have to run. We have to head into that other meeting. Have an awesome, awesome day. Thanks so much for joining me today. I really appreciate it. Take care, everyone.